The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 10th day of July. Dow's up 150 at 24,926, certainly surpassed by quite a bit the 12,680s that I said was the real level to watch yesterday. We took that out, and today we've gone even higher. And the S&P is only up 8, so the Dow is up 0.62%, the S&P is up 0.33 at 2793.23. The comp index is up 10 at 7766. So this is going to be very interesting. You see the E-mini here. Let me get this 120-minute chart to show you something very interesting. Well, I had shown subscribers yesterday, and then again this morning. But there was a large bull formation in the 120-minute chart. And then there was a real good chance that if the E-mini was up over 6 points at 11:10 yesterday, that there could be a higher high to come. Well, the 2785.25 high of about the 20th or 21st of June was surpassed yesterday, went to 2797.75. Just making a little cup formation here. Slight pullback after a really superb session. Walking the 9-period moving average, the green line, holding the not even coming close to the 14-period, the black line right there. MACD has turned down the 120-minute chart. Stochastic weaker, but still good at 84%. So this is going to make it very important over the coming couple of hours. Why? Because there are a number of aspects that are saying right here, there should be some kind of a pullback, even if it's just a one-day pullback before recycling higher, for a couple of reasons. This is leg D in the weekly chart of the E-mini, and it's a leg E/B in the daily chart. We need to see where it closes by the end of the day. Any close around about here, 27.95 up 7.75 will be good. But if there's a pullback and it closes under 27.93, then this has become suspect, and I have to treat it more like it's an E rather than an alternative count, very positive B. All right, let's get to the nitty-gritties, and I'll show you what we're really looking at here. Yes, for subscribers, I will be updating just after my show finishes. We need to just go through a couple of things. I'm not sure about any changes yet, and as we go through here, you'll see why. So the Dow, we're still short the Dow. I'd said on the way down, especially when we hit the 200-period exponential moving average, this is where you want to be taking some profits. This is where you want to, as a swing trader, this is kind of what you want to be looking for, because there could be a turnaround. When there was a failure pattern on over the weekend, I said there's a chance that we're making a Chapman wave restart. And a restart says that you keep making these peak A, and they kind of become A minuses because there's a lower A below it, but it doesn't take out the low bar. In this case, 23,997, the low of the 28th of June. And then you got that big rally yesterday. Well, within the context of the weekly chart, this is still just a consolidation. There isn't the breakout as there is in the other indexes. And if you want to, we'll just move this away for a second here, because there are other other 100, sorry about that, behind the curtain. There are other 120-minute charts that I want to show you. Oh, I just did that again. Sometimes it's a little difficult to get that right there. Okay, here we go. Now, within the context of the weekly chart, rectangle going towards the upper end should come back into the middle at some point. One of the reasons why I didn't really want to change the short position that we still have, even though we've taken profits, we have some position left. And I was reluctant yesterday to have two positions, or I had them for about a day when we were switching from the long side to the short side around about the 13th of June. I was going to do that exact same thing again today. And then I said yesterday and today, then I said, you know what? Let this just play out, because by other measures, there is a certain toppiness that's unfolding. And here's what I'm looking at. If you look at the 120-minute chart, this is what I show subscribers every day in my overview of what we should expect each day. You see, there was, just like the S&P made that cup formation, we had this cup formation in the 120-minute chart, which said this Chapman wave inside track, light green right here, light green target resistance line is really important. And what it says is it could take you towards the 24,800s, and that would be a left side, right side price time match. To get it today, that would have to take you towards the 24,990, 25,003 level. And this is what I'm really looking at. See, the Dow stalled at 24,945 in a leg E, in the left side, right side price time match, an exact time match to the low bar of the 11:30 on the 29th of June at 23,997. More than that, you can't ask for in a technique. But the MACD, the moving average convergence divergence, is still stronger. The stochastic still at 96%. That's very strong. So from here, I can do an analysis. That's why I thought kind of mid-session, it'd be good to give an update to see if we're going to make any changes. We're not afraid. We're long, we're short. I am kind of upset that I didn't switch as I saw it over the weekend, just to switch and go long. And one of the reasons is I think we're still in the choppy phase of the Dow, and that's saying to me that we could come back into the 24,600s, 500s. No big deal, but that would be the big test of strength or weakness. All right, so enough with that. And the other thing is we have gone to leg E and a Chapman wave 5 in the 120-minute chart. And that said to me, hey, if this happens intraday, updating just after 1 o'clock Eastern time will be very good. And you want to make changes, that'll be a good time to do it. All right, now back to our story. Here we go. So the parameters to watch, starting to close in the 25,000s for the Dow is very good action. There could even be a test of the last high of 25,402 over the next week or two if sustainability of 24,700, 24,600 support is maintained. All right. The S&P, SPX.X right now is up less. It's up 8.93. Still very good action. Why? It's gone above the high that was made on the 13th of 2791.47. We've gone to 2790, was that 795.58. Haven't closed there, but this is very good action. V-shaped recovery in a much shorter time. How it closes above 2791.47 is going to be very important today. It is a leg D. Now, I saw this and I was going to discuss it. I thought, oh man, just yet another elaborate, lengthy pre-C that I have to make a case. Let's just see how it plays out. What I was going to do is I was going to say, look, there's a rectangle formation, very clear rectangle. I know I spoke about it, but I haven't discussed it in detail. Right here in the S&P. And that suggests that within the context of the S&P from the high of the 2872 level on the 26th of January to the low in February of 25,553.80, you could get an inside Chapman wave leg A, B, C, and even to a D. Lo and behold, we've just got that D, and we're at resistance. I'll be back and we'll talk about this more.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So the S&P, the parameters to watch is a close it's a 2792. A close this week in the 2802 or higher area would really say, hey, wait a minute, there is a chance now that it can go to the all-time high now rather than later. So we'll be watching that, and key support is around about 2782 to 2776. Now, I want to go to the QQQ. Look, stalling a little bit up 27 cents, a little doji candle. Great move. I believe I heard Steve Rhodes that he was long the other day. Congratulations. Very nice move. 177.47, up 28 cents. Hasn't yet made 177.99 to break above that June 20th high, a peak D at 177.98. Very close. The MACD is good. Stochastic's really struggling at 66. And I suspect that the weekly chart is the one that we're going to have to follow, because if at any point it starts to trade in the 179s by Friday this week, that's going to make the weekly improve a lot, and it extends the monthly leg E. Let's go to, so key support is at 176.20 to 175.45-ish. IWM, the Russell 2000, down 80 cents at 168.51. So I had to transfer my subscribers. We were out last week, Thursday, of our short position from the exact high. We had a chance yesterday. I had put in to buy the inverse short position, that is the TZA. I lifted it this morning for only one reason. Everything about it said that was the price that we would like, and that's the price I should go for. But the difficulty for me today was I didn't know how I could put a stop in, even though it would be a very small percentage. That was my only difficulty. It's a pity because of that particular instrument's trading at 850 right now. We would have been at the 836 area. Not an issue. Why? Because the MACD is just barely positive. Stochastic's rallying. MACD in the weekly and the monthly charts are still good with the stochastic. So there could still be a bounce to the upside. I didn't want to take a chance, only for two reasons. One is I didn't want to get in if the IWM then closed at its high, and yet we were still in the short position and then gapped up tomorrow morning. That's really tough. That, I mean, when you're in a 3 times long or 3 times short and there's a gap, there's nothing you can do. That's the way it is. I just didn't need that risk. We've done so well. I didn't need that risk. It would have been great, and it would have been great if, in fact, from here on into the next week, there is no new recovery high above the 169.87 high of today in the IWM. Hey, there's just enough residual strength for me to have been cautious. So the levels to watch are close below 167.70 in the IWM. It's trading 168.55 right now, down 76. Would be a negative, not very negative, but a negative, and a close above 170.30 says, hey, you're in new high territory. That's a good sign. I want to go to the gold. Gold was down quite sharply earlier today. Now it's only down 3 at 1256.40. What I'm looking at here is I still believe that the dollar, which we're still long, which has a sell signal, a sell mode in the daily chart, I think the dollar is going to be pulling back a little more, and that gold should hold okay. I don't know if gold's going to really spike to the upside or whoosh to the downside. I think it's just in a trading band, and it's got nice support in the 1242-ish area. It's kind of the way I'm looking at it right now. So gold is just down a little bit after being down much more earlier on. Silver's down just 2 cents at 16.11, same sort of thing, and I wouldn't be surprised if it tests the 16.22 area in the next couple of days. Look at the dollar. The dollar went to the 9-period moving average, then it went to the 14-period moving average, and then it got repelled, and now it's up 14 cents at 94.22. I did a whole study that over the weekend for my subscribers. I like to have my newsletter, the opening call, become both a newsletter as well as an educational vehicle. So I have exercises and stuff that we're looking at. It's really based on the UUP, which is what we're along. This says that there's a chance that if we break 2470, could be a real quick run to the 2450s, and then we'll see what happens to the dollar because of the weekly chart still being very strong. And at this particular point, the dollar, I didn't tell you, but the dollar is up 14 cents at 94.22. All right. So now I want to go to crude oil. Then we're going to get going with all the questions. And a really bunch of good questions. Crude oil is at 73.78, down 7 cents. I think there's one chance of a little pop to the upside above to make that leg D, the missing leg D in the daily. And that would be above 75.27 in the continuous contract. But I think it's in a chop sideways range between the 74s and the 71s over the coming week or two. That's that. Now we're going to go to the iShares 20-year Treasury bond ETF, 121.91, down 5 cents. Yeah, it's just holding quite nicely. If you look at the yields, same thing with the yields. The 30-year, whoops, the 30-year right here. 30-year is white. The brown TNX is 10-year, and the cyan is the FVX, the light blue one right there. They just in this trading band. That's what I've been expecting towards the lower end of the band. I suspect the 10 and the 5-year, that's going to be the big clue. If they start to pull back more, then we might see the market, bonds go higher and the market pull back a little bit, which is what I'm kind of expecting. I'm expecting that we're going to go back into a range in the market. All right, I think I've covered just about everything except for high grade copper. High grade copper trading right now is down 0.017 at the lower end of the range. Doesn't look very good. And then, yes, there was a question when you saw this chart right here. You wanted to see it. This is the chart with wood, the iShares Global Timber and Forestry ETF. It's made a very deep decline, and it's just trying to rally right now. But I think this is going to fail. And the home builders are having a nice session right now, although they're down 1.59. This candle is not a bad candle, but I think they're making lower lows and lower highs. I've done everything. Now I want to go to the questions. So earlier on, I hope I can find it. There was a question here. Where do I come on? There it is. Basil, could you look at MCF? There's a bunch of them. MCF is, there are natural gas. So MCF is Contango Oil and Gas, trading at 6.46, down 18 cents. It's in a leg E/B. Now, one of the things I'm looking at here is there's a leg E in the weekly chart and a leg B in the monthly. I love the action, but the action says that there's a real good chance we're going to come back and test the 605 to 575 level over the next 2 weeks. If I'm wrong, MCF is trading in the sevens by, today's Tuesday, by Friday afternoon. It's Thursday afternoon, it's in the sevens. I think it's going to be pulling back, and I'll show you why. The next one is CHK, I think that's Chesapeake, CHK trading at 530 and up a penny. Leg E in the daily. MACD is just flat. Stochastic's okay at 83%. Weekly chart has gone to a leg E, daily's in leg A. I suspect we're very close to some kind of a consolidation. This is a very favorable group looking out, but on a shorter term, I'm anticipating that this group is going to have a pullback. 540 right now, 520 to 515 is kind of the area. Give me a call right then, and let's see what happens if it's now time to enter if you haven't already. That's CHK, and we'll be back with one or two more when I return. Dow's up 129.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, so CHK, as I said before, leg E daily, leg E weekly, leg A monthly. Very good action. I like it on the weekly chart, but I suspect it will pull back a little bit, maybe 25, 30 cents, and then we maybe have a look at it again. And then RSX, which is the Russia ETF, it's the Van Eck Vectors Russia ETF, made a peak E in the monthly. It's in a leg C in the weekly, and it's just making a leg D. And this kind of corresponds to what we're looking at in some of the overbought sectors, oil, that the natural gas stocks there as well. And so I think that, yeah, this is very good action. MACD and stochastic are strong. I wouldn't be surprised if the RSX trading at 22.17 down 4 cents actually pulls back into the 21 70s, and then we'll reassess. But I don't see anything right now. Would I buy it is the question. You know, looking out, I think it's going to be choppy, but it's going to move higher. It's going to move to the 2250s. Do you want to buy here with the 30 cents gain, but a chance of about a 40 to 50 cent move to the downside? I'm just going to say I'd hold off right now. You've lost the best risk reward entry. That's all. Goldman Sachs had a fabulous day yesterday. Today it's giving back some, down 52, but it did make a slightly higher high. I like this in the sense that it's just starting for the first time to give technical indications of some kind of strength. I'm watching these very closely. The financials earnings come out starting Friday. Bank of America is trading at 28.86. It's down 18 cents. Yeah, it needs to get to the 29.50s, and that'll be a good sign. These are all just starting to try to move higher. It's going to take a lot to do that. XLF is at 27.20 right now. Same sort of thing. Needs 27.55, 27.61. And then it's going to holding there for a day or two. That'll be good. KREs, the regionals, down 67 cents. Same sort of thing. Sideways trading pattern. There should be an upward bias if it occurs in the next couple of days at 62.57 on KRE, SPY the S&P Regional Bank, ETF or fund. I think it needs to get to the 64s, and then it'll start to show some strength. IYT is the transports, almost the same pattern. Sideways action, trying to hold on to the weekly dashed uptrend line. Monthly chart still good. Technicals are weakening, but price is holding well. It mustn't break under 188. This is 190.93, and it needs 194.20, and to hold there for about 2-3 sessions. That'll be very good. I had a couple of questions on where did it go? Let me see if I can find it. Yeah, okay. So IYR, I focused on this over the weekend. Yeah, it's making a leg E, then it's a peak E yesterday, and now it's confirmed peak E at 81.52, up 16 cents. IYR is the Dow Jones US REITs Index Trust, and it's at a leg D, probably a peak D. There's no new high this week. I'm watching this. This is very good action. I always get a little nervous when you've taken almost a year to get to a certain point, and then that's leg E. This is one of the most unusual charts under the peak F all-time high that was made back in, was that August, July, August, 85.80, 85.80, July of 2016, exactly a year, 2 years ago. It makes a high. It pulls back in like an A to B equals C to D, but it takes a long time to get to that peak E. And that peak E was underneath the last peak F. That's usually very negative. It says, hey, you should be going back to test key support. Well, it did. And it broke it. It went to the support of November of 72.11, ran up to the high that was made at peak E, December of 2017 at 83.27, and then plunges 83 down to 71. That's 12 points. That's what is that? It's about 13%. And now it's almost back to that previous high. And that V-shaped pattern says, watch the right side. If there's a failure, there's a monthly chart, then it could come back and test key support. That would be at 78.90, and it's at 81.50. So I think that the IYR at this point might have some limited upside. Just be real careful. I wouldn't actually be buying it right now, even though I do like it. Looking out, I just need to know where's it going to find support. All right, so, and all right, IBB, I'll do that. IBB is trading, disappeared. IBB. This is the NASDAQ biotech sector, down 28 cents at 116.53. It made a new recovery high today at 116.98. We're actually long from the 110s, goes to 116.98. Now it should be pulling back a little bit. What's really important about this is that the technicals and the weekly and the monthly are really very different to the other indexes that we're looking at. And that said, to me, there's a chance that the NASDAQ biotech sector is going to become a kind of a summer darling for the fund managers if it can hold well, which is the reason why we went long, because the technicals and the weekly chart were really improving a lot. So that says it's got a lot of support between 114.30 and a little under the gap up. Low, I'd say that I'd go to the 113.10 area. That should be good support if there's a sudden serious pullback. Normally, I'd be looking at this and saying 115.50 to 115.10 should be very good support. Let's see, but that gap was very big, and the follow-through extension on Thursday, I think it was really good. Okay, now I've gone through a chunk of those things. Okay, question over here on the right. Let me just check this out. Yeah, so someone was asking about gold, about AEM. Let me have a look at it. I don't think I've looked at AEM for a little while. AEM trading at 46.24. It runs up to a peak. So that, this is interesting. Oh, there it is. Okay, I knew there was a lower low. All right, here we go. From the low that was made back in May, you go peak A, B, C, T. Very, very circuitous and absolutely a choppy series of U-shaped patterns with higher highs and higher lows. And now this is peak E. So I'm going to call this, just for the moment, for a day, I might do this, E/C. There's a good reason why I'm saying that. Look, the MACD's flat. It hasn't turned down. This is the first time you haven't got that inversion where the price rallies to make a high in the MACD. Stochastic makes an on-balance volume make a top and reverse immediately. This time the stochastic's flat at 78%, under 80%. But look, the MACD is holding steady as anything, and the 9-period moving average held. So I'm saying AEM right here at 46.23 says if there is support over the next 2 days and it doesn't close below 45.50, instead of it tries for 46.53, that's going to be very good short-term action. And it's A, B, it's in leg C in the weekly chart. So far, so good. AEM, Agrico Eagle Mines trading at 46.21, up 3 cents. Trying to hold on after a really ugly 2 days. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 144, S&P's up 8.64.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger Ignition's Hour. Dow's up 150, S&P's up 9. I'd say to subscribers that if at 10 minutes past 12 today, the E-mini was over 60s and the Dow was over plus 60s, that would portend a pretty good close at the end. So let's see what happens here. Now, I've got an expression, rectangle formation is going to last a lot longer than your patience. So let's just have a look here. We've got the E-mini with a high so far of 27, made it a peak D on the 2-minute chart at 27.9650, and the low that I'm using is the low of 12.26 at 27.9400. Let's just watch that. We'll be back to it in a short while, see what's happening. Okay, question here is, yes. So the question, of course, I was talking about AEM, Agnico Eagle, peak C in the leg C in the weekly chart with the MACD and stochastic still very good. Had a pretty severe pullback from the 47s down to the 45s over 3-4 days, and now it's trying to rebound. And this to me is very interesting because if you look at now Ari from Arcadia, we always look at RGLD, Royal Gold, and IHM. It should be making a leg D at the time that we were talking. I don't think it had gotten there, but I said it should make a leg D. Look at this beautiful monthly chart, and it's trading right now at 91.80, up 17 cents. But look what happened. There was a left side, right side price time match based on what I look at. This is not the exact low bar. I'm going to do another one with the exact low bar over the next couple of days. But the 100.84 high of September of 2012 slumped down to 24.68 back in 2016. I think it was December. Came all the way back just the other day, maybe 4 days ago. It in the 98s. It went to 98.53. So it was underneath 100.84. So because it's underneath it, I'm going to say, and this we've got 2 months, we've got another month to go. I'm going to keep that there. But what I am going to say is that if it misses and it pulls back towards the 87s, let's just say towards the 87s over the next week or two, that's going to be something to watch. Why? Because then I could do an exact left side, right side price match from September of 2012 in the 184 area to the low that was made January of 2016 at 24.68. And that would take you out 1, 2, 3, 4. That'll take you another 4 months, and that'll be September, October, November, December, a year. It'll take you a year. Let's see what happens. You got a year in which to get to 100.84. Okay. So I did want to show that, and I'd say to Ari, that's a great position. He was long for a long time ago. I said, I don't think I'd even change it on a purely technical basis. I take a little money off, try to put it back, lower down. But if you're in for a long-term position, I'm not sure yet whether I want to. I haven't got a peak D. It's just a leg D. I do have a peak E in the weekly chart. And that says, okay, be a little careful. And that was a G/C. I'm sorry, I forgot to update this. That should be a G/C. It's obviously a GC minus in the daily chart. RGLD trading up 23 cents. Now I want to go back to this right here. Okay, let's watch this real closely because evidently Norman said that we would be pulling back at about 5 minutes ago. That would be 12:42. It is now 12:46, and we've had a little bit of a dip from the 27.95 to 27.94.25. Let's see if this is going to go a little deeper, and then we'll see what happens after that. I just got to keep reminding myself. Remember, you told your subscribers that just after like 1:15, you will have an update. I just got to remember that it's so unusual that I'm liable to do something, and at 1:20, I'll suddenly say, oh my God, I forgot to do the update. The reason why I'm sort of not quite remembering it is my plan. Yeah, I think my plan is going to be to do nothing. We have positions. I don't know if I actually want to change any of those positions right now. So, okay. Now, a couple of questions just came in. One is, would I look at Tesla? So Tesla, trading right now up 2.11 at 320.62. Quite some time ago, I said I'm anticipating that this peak D that has just been formed, in September of 2017, 389.61 was the high. It did pull back under 250, and then it's rebounded very nicely. My thinking here is that Tesla is going to be under tremendous pressure. But there are so many shorts out there. There are so many people anticipating that it would have a problem that when it comes, it's just going to be a flurry of activity. The peak F that I spoke about a lot in my show a few weeks ago, when we started looking at the different short sides that we were about to take, I said, I'm going to the short side because we've seen so many round numbers and Chapman wave 2-bar reversals, as well as silent dojis. And remember, on the 18th, Tesla made a high of 373.40 on the 18th of June. The very next day, the high is 370 round number. And I said if it breaks above 370, it's going to go quite a bit higher. But my feeling was that it was going to put pulling back. When it's pulled back, it's almost like one of those. This is what I call a parallel. No, it's not quite. I was going to say parallel Chapman wave 1-to-1 extension. No, that would have been like this. And then I normally just click. I get an exact parallel, new parallel, and it goes to the high right there. No, this one definitely wasn't that because the angle is pretty much the same, but it moved too much to it went straight down instead of moving to the right. But the price went beyond that. So I'm thinking that there could be a little bit of a rally, but I would not be surprised if Tesla, I would not be one of those people wanting to buy the cars that made the 5,000 level a couple of weeks ago when he said, we're going to hit 5,000. He must have done everything. I can imagine the quality control not there. I don't see how it could be when they push so much for the Teslas to make 5,000 vehicles in that 1 week. I wouldn't want to be buying. I'd like the VIN number, or I like the numbers, and I'd like to know, because if I'm buying a Tesla, I'm not buying that week's Teslas. Okay, now we've got a couple of things that we need to look at. Tesla up 171. If at any point in the next, I'm not even going to say month, I'm going to say in the next week and a half, if Tesla closes for 2 sessions under 297, let me just double check. I want it under that. 296.22 under 296, 2 sessions under $296. I think it's a very quick run to the 257s. But in the meantime, it could just chop around until it does that anytime, especially if it's in the next week, by Wednesday week. I think that would be a real issue. All right, let's just have a look at our little pattern here. Went under the rectangle pattern, and just as I said before, it hit the 200 period moving average on the 2-minute chart at 27.93.38. All right, we're going to be watching this. So I think you said 1242, and at 1244 started to move down. Very good, Norm. Let's see if this is going to continue down. All right, Basil Chapman, we have one segment to go. When I get back, and the Dow's now up 125, S&P's up 7.77 points. 18.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget Steve coming up. Then you've got Dave White, Tom O'Brien. Just a great day of listening to the hosts here. So our positions, we got UTX. We're still long 8 positions, small position, but we're still long. We've taken some profits along the way. We still short the Dow, and I'm going to be updating subscribers in the next 20 minutes or so. And it's at 24,900. We got short right there in the 25,300s, I believe it was. And then on the way down, to take some profits. We're still short the semiconductors. Where they're trading right now for $1.19. Nice action, 106.93. We were short right from over there in the 110 area. So I'm going to have to make some decisions there. How much more can the SMIs move to the upside? We added some positions. We are long gold stock. We are now long a financial for the first time in quite a while. So I'm not afraid to go long. I'm not afraid to go short. The IBB that we bought in the 110s right now, 116.30. That's fine. Very nice gain. I'll have to raise the stop because it might be bumping in leg E, might be bumping into some kind of resistance. This doesn't look like it's an A. Well, we'll see. So, as I say, long positions, short positions, and I took it off. I should have kept it, I suppose, back into the TZA, triple short the IWM this morning, almost at the exact lows. Would have been great because it's trading now at 8.54 instead of the 8.36 that we would have been buying it at. All right, well, that's the way it goes. And most importantly, I'll be back with Tom a little later on today. This is a key moment in the sense that if the Dow is able to trade in the 25,000s for a couple of days, I think you've set a new benchmark for support. If it fails by the end of the day, gets back into the 24,820, 24,780, as it says. Oops, just a bounce, and let's see what happens after that. Very key moments right here. All right, so we're about to wrap it up, and I just wanted to say, stay tuned to check out my opening call. Hopefully you'll find it beneficial and very profitable. And have a great day. And otherwise, if I'm going to see you with Tom later today, see you tomorrow at this time. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.